Very good morning, everyone. Hope you all are doing great. So let's start with the PGBP questions today. Since, in fact, this would be a kind of a total income question, mostly PGBP, and it came in July 2021 examinations. Okay. So it says, Ashish, is my screen visible to everybody, guys?
Yes, sir.
Yes, sir.
Okay, good. It says Ashish is a resident individual, age 43 years, provides a professional services in the field of interior decoration. So they provide, he's a professional, correct? His income and expenditure account for the year ended 31st March 2025 is as under. His income and expenditure account is given to us, and the information is given to us. And you understand the first thing which we should remember, that what we should see is that what we need to compute. We need to compute the total income and tax liability of Ashish. So we have to compute the total income also, as well as the tax liability also of this person, assuming he has not opted for 115 BAC, that is under optional regime. We need to compute his income. Correct? Everybody understood? We need to compute his total income. We need to compute his tax liability as per the optional regime. Himayu, I'll take that question. If time permits today, I'll take that question. Okay. Now, coming back. So let us see that what type of income he is having. So because we need to calculate his total income. So mostly because income and expenditure account is given. Guys, income and expenditure account is same like profit and loss account, right? So excess of income over expenses, this is our profit. So this is our starting point when we will start PGBP. So let us see what are his expenses. Okay, tell me everybody. Employee remuneration and benefits. Should it be allowed or not allowed?
Allowed.
Allowed, sir.
Everyone, okay, allowed, good, because it is nothing but salary. Section 37 allows it, no problem. Office and admin expenses, I believe everybody is okay with it. We should allow this. General expenses.
एक बात तो पक्का है कि हम कहीं ना
What do we
कहीं
think about general expenses?
तो मुझे आप एक बात बताओ, क्या ये जो ऑडिट रिस्क है,
Give me a moment, guys. Who is unmute? Guys, okay. Kaushik. Okay. General expenses should be allowed normally. Electricity expenses. What do you think about electricity expenses?
Allowed, sir.
It should be allowed. Normal expenses, we are assuming it is for the business purpose, so it should be allowed. Unless and until there is any specific information, we will allow this expense. Medical expenses, we should allow. Okay. Purchase of furniture. What do you know about this?
Not allowed, sir.
Allowed, not allowed? So Manu is saying not allowed.
Not allowed as capital expenditure.
Everybody, my YouTube students, it should not be allowed. Why? Because it is a capital expenditure. So purchase of furniture, it is a capital expenditure. It should not be allowed. Rather, we should look for the depreciation on this furniture. And what is the rate of depreciation on furniture and fittings?
10%.
10%. Very nice. So 10% is the rate. Also, we will see that how we'll be computing the depreciation also. And they have given the information regarding the depreciation as well. See, if nothing is mentioned, then we will assume that this is correct depreciation as per section 32. And if some other information is available to us regarding depreciation, we will do it accordingly. Correct, like it the 10%. Very good. Sugandha, correct. It's a capital expenditure. It should not be allowed. Okay, this is expenses over income. That is my net profit. Let us look at the income side. Consultancy charges. What do you think? This person is a professional. Is it his business income or not? Yes.
sir.
Yes,
It's
sir.
a normal consultancy charges, consultancy fees. It is a business income. Interest on PPF. Okay. Please tell me what type of income it is.
IFRS income, sir.
But it is exempt.
Very nice. See, everybody, please tell me. Sugandha, Likitha, Salai, everyone on YouTube, also please tell me. This is not a PGBP. First of all, this is not PGBP income. We will delete it. While computing PGBP, we'll subtract it. This is not my PGBP income. However, it should go in IFOS. But you remember I believe in the class 1, I told you,
ATC.
if it is from PPF, interest from PPF, this is actually an exempt income. This interest is exempt. See, whenever you deposit the money in PPF, what is the full form of PPF? Public Provident Fund. Anybody can open this PPF. Whenever you deposit the money, it is actually a TC deduction. A TC deduction we get when we deposit the money. When we earn the money, it is also exempt. So it is also exempt. And actually at the time of maturity also, the money which we receive, that is also exempt. In practical life, we call these schemes like EEE. EEE. In practical life, we call these schemes, please don't use it in your examination, but in practical life, we use it, we call it EEE, exempt, exempt, exempt. The first exempt is when we actually invested the money, we got an exemption under ATC, right? The second exemption is when we earn the income, when the interest got accrued, that is also exempt. So this is an exempt income. And when there is a maturity, then also this income is exempt. So people call it EEE, exempt, exempt, exempt. Some people call it entry, earn, exit. Entry, when you enter into this particular scheme, you get an exemption. Entry, earn, when you earn, that is also exempt. And when you exit means on maturity, that is also exempt. Okay. So this is an exempt income. You will show it in IFOS, but you will show it as nil, 0. But you should show it there. So we'll do the presentation also, don't worry. Interest on saving bank account. Guys, please tell me, interest on saving bank account.
IFOS income, sir.
IFOS.
It is not PGBP. So while computing PGBP, we will take it out and we will take it in IFOS. This is my IFOS income, taxable IFOS income. Okay. Guys, as and when you will see saving bank account, your mind should go, because this person is following optional regime. And here, correct. Here we need to compute just PGBP or the total income. Total income. Total income means you have to first compute GTI also, and then after deductions also, this will get you a total income. So whenever you see this saving bank account, your mind should go to 80 TTA. Correct. So if this person is following optional regime, so we will give him 80 TTA also. Guys, nowhere it will be mentioned now. It is the only this information which is given to us. So first we will take it in IFOS, then we will give the deduction of 80 TTA. And had it been a senior citizen, senior resident,
TTB.
then 80 TTA is not available. Then a better deduction, 80 TTB, would have been available. But in this case, this guy is not a senior citizen. He is 43 years of age. So here he will get 80 TTA. 80 TTA is maximum how much? Tell me everybody.
40,000, sir.
80 TTA, how much maximum?
10,000.
Okay, some students are saying 40,000. They might be having some TDS provisions also into mind. So Ganda is telling me here 50,000.
In case
10,000.
of
And
fees,
Abhiram is telling me 10,000. The answer is 10,000. TTA is maximum 10,000 rupees deduction. The interest for 10,000, whichever is lower. TTB is 50,000. TTB is 50,000. Right? 40,000, etc. That is a TDS provision. We'll see in TDS. So Manu, got it?
yes, sir.
Okay. Interest on National Savings Certificates, 8th issue does not matter. NSC. This is National Savings Certificates. This is the interest for the third year. What does third year means? Let's say we have invested the money for 6, 7, 8 years. So in the third year, we are earning this interest. How much? 21,000. First of all, tell me, is it a PGBP income or not?
No,
No.
sir.
No, it is not a PGBP income. It is
IFOS.
not a PGBP income. We will take it in IFOS. We will take it in IFOS. Second important thing is that this guy is following optional regime. So he will be getting the deductions also 80C to 80U. And please remember, this is first of all, it will go in IFOS income. This is my IFOS. This is not my PGBP. The second thing which you should remember is Section 80C tells us that maximum 1,50,000 is the deduction which is available in 80C. Everybody's okay with it? Maximum 1.5 lakh. In 80C, we can invest in various types of investments. There are various investments. We can invest in life insurance. We can pay the premium of the life insurance policy. We can pay the tuition fees for the children. We can invest in some mutual funds. We can invest in PPF, etc. And in 80C, we can deposit in 5-year fixed deposit also. 5-year fixed, not any other fixed deposit, guys. 5 years fixed deposit at least. And we can also invest in National Savings Certificates, NSC. So we can also invest in NSC. So please tell me, has he invested in this year or this is the third year? This is the third year.
Third year, sir.
So he has invested in year 0. Year 0 means in a year he has invested, then he is earning interest. Let's say, for example, in the year when he has invested, I am going just 3 years back. I'm going 3 years back. The day when he has invested, let's say, for example, he invested 1 lakh rupees. In 80C, he will get deduction of 1 lakh rupees in the year when he has invested the amount. Now understand. Now let's say in the next year, he earns 12,000 rupees as interest. So first year, let's say, or year 0, he invested 1 lakh rupees. He deposited 1 lakh rupees. In this year, he will get 80C deduction. In the second year, let's say year 1, he has earned interest of, for example, 12,000 rupees he has earned the interest. This interest is also IFOS income. And also this interest is assumed to be reinvested. It is assumed to be reinvested and it is actually reinvested. And it is also eligible for 80C deduction. I'm again repeating. He has not invested anything in the next year. He has invested 1 lakh rupees in the year 0. There he claimed 80C deduction, but NSC interest, which is which gets accrue and gets reinvested, and it always reinvested. We can't withdraw it. It always gets reinvested. That is also an eligible investment for 80C deduction. So this is a very, very unique thing regarding NSC. It's not with others, but regarding NSC, National Savings Certificates, it's a unique thing. So first, make it your IFOS income also. And also this interest is eligible for 80C. And not only in year 1, in year 2, year 3, year 4, whenever you earn interest, that interest becomes your IFOS income and also an eligible investment for 80C. Guys, have you understood or not? Everybody.
Understood, sir.
Yes, sir.
Everybody understood or not?
Sir.
Everybody who is watching on YouTube, please hit the like button if you understood. And everybody should actually hit it. Even if you're not liking it, please hit it. Okay. Now, so we will make it an IFOS income also and also investment of 80C. Now, look at the information. The following other information relates to the financial year 24-25. First, expenses on employee remuneration and benefits includes. So they are talking about this amount. This amount includes it has some information. Let us look at the information. Family planning, expenditure of 20,000 rupees. Incurred for the employees, which was revenue in nature. The same was paid through account paycheck. Okay. So this employee, who is the assessee? Ashish. This amount includes that we have incurred expenses related to family planning and these expenses are revenue in nature. These expenses are revenue in nature and we have paid through account paycheck also. Please tell me whether this 20,000 should be allowed or not allowed. Everybody tell me, why not allowed?
Only for company SSC will allow family planning.
Correct. We allow family planning expenses. Family planning expenses are allowed under section 36. However, only to company assessee. If this profit and loss account would have been of company, Ashish Limited, A Limited, B Limited, C Limited, I would have allowed these expenses. These expenses are not allowed for any other assessee other than the company assessee. So only for company SSC family planning expenses are allowed. And if you remember the students who have done regular batches, I have told you the story. That what is the story behind this family planning expenses? I've told you that during the time of emergency, something has happened. So I'm not repeating that, but please remember that family planning expenses are not allowed for any other SSC. Whether they are revenue, whether they are capital, does not matter. So 20,000 should not be allowed. Had it been a company SSC, but in intermediate, institute will not ask the question related to company. But had it been a company SSC, then revenue expenses are allowed and capital expenses are allowed in 5 installments, 1/5, 1/5, 1/5, right? But this is only for company. For other SSC, whether they are revenue, whether they are capital, please don't allow it. So students can make a mistake over here. They feel that, oh, sir, we have learned somewhere that revenue expenses are allowed. Let us allow it. No, it is for a non-company SSC. Don't allow it. I believe everybody is clear on this point. Next, this point. Payment of salary 25,000 per month to sister-in-law. 25,000 per month. 25,000 into 12. That is 3 lakh rupees. It is per month, right? Payment of salary of 25,000 per month to sister-in-law of Ashish, who was in charge of accounts and receivable department. However, in comparison to the work profile, the reasonable salary at the market rate is 20,000 per month. So how much we are paying in excess of fair market value? We are paying 5,000. 5,000 per month in excess of fair market value. 5,000 into 12, 60,000 we are paying extra in a year. What will you do of 60,000
He
rupees?
should not do anything
Allowed.
because
I
he is
think
not
so.
a related person.
Very
he's not
nice. Everybody tell me. YouTube comments, please tell me what we should do. We should allow it. Why? Because sister-in-law is not related. Sister-in-law is not related. Sister is related. Brother is related. Parents are related. Spouse and children are related. That's it. Section 48(2). Section 48(2) payment to related party, and for individual the relations is very, very limited. Only sister, real sister, brother, they are allowed. Sister-in-law, it's okay. Sister-in-law, it is non-related. So 48(2) will not apply over here. 48(2) will not apply over here. So if we are making an extra payment to a non-related person, we are completely okay with it. So what you will do in computation you will not do anything. Everything is allowed. You will just simply write a note that the assessee can make a payment in more than the fair market value to a non-related person. Sister-in-law is non-related. Everybody got it? So it's not a related person. Correct, Vijay. It's not a related person. Now, second, amount received by Ashish. Second point. Amount received by Ashish. For everybody, the screen is visible now. You are able to read it?
Yes, sir.
Yes, sir.
Okay. Amount received by Ashish as employee contribution to EPF for the month of February 25, 10,000 was deposited after the due date under the relevant act related to EPF. Okay. Amount received by Ashish. Who is Ashish? Ashish is our business assessee. He received some employee contribution to EPF. He receives employee contribution to EPF. Let me explain this to you. I believe that most of you must be knowing it, but let me still explain it to you. Let's say, for example, there is an employer. For example, there is a company. Let's say, I take an example, Infosys Limited. Infosys Limited. And they pay salary to their employees. They pay salary to their employees. So what happens? Let's say one of the employee is Bala. Bala is one of the employee and it's his salary slip. It's Bala's salary slip. Who is Bala? Bala is an employee of Infosys. Infosys pays him salary. It's a salary slip for any month. Let's say he has a basic salary of 80,000. He has other allowances of 40,000. So total salary which he has is 120. So company gives him 1,20,000 rupees as salary. So Infosys will say, I'm just taking for 1 month. So they will say salary 1,20,000 we are paying to Bala. And what they did is, actually, so what do you think that Bala will receive 1,20,000 in his bank account? Let's say he has a bank account in HDFC Bank. So what do you think that he will receive in this month? 1,20,000? The answer is no. Some amount will be deducted of TDS. So I'm ignoring TDS as of now. And the other amount which will be deducted is the employee contribution. Employee contribution to Provident Fund or any other fund. Let's say Provident Fund. For example, 4,000 is deducted for employee contribution to PF fund. I'm ignoring TDS. So out of 120, 4,000 is deducted by the employer, and in his HDFC bank account, he will receive 1,16,000. Is everybody's clear till here? Everybody's clear now? So he will receive 1,16,000. Okay. Now what happened to this 4,000 rupees? See, first of all, who will deduct this money? This 4,000, Infosys will deduct. It means that Infosys is keeping this money with themselves as of now, for a very temporary purpose, for a very, very temporary period. They keep the money with themselves. So it means that they are receiving 4,000 rupees as of now. Why? Because they were supposed to pay 120 to the employee, but they have not paid 120. What they have said that we are paying 120, but as of now, 4,000 we are keeping with ourselves. So 4,000 they are keeping it themselves, but it should be kept for a very, very limited time. And the law says that if, let's say it is PF, so PF Act says that maximum, you can keep it for maximum next 15 days. For example, it is the salary for April month. So you can keep it for maximum up till 15th of May. Next month, 15th. And if you keep it for more than that period, let's say, because you should not keep it with you. Why? Because this is PF. You should go, Infosys, you should go and deposit in the PF account of Bala. Please go and deposit in the PF account, because what it is employee contribution to PF. This amount should be deposited in his PF account. And who will deposit this money? Can Bala himself deposit the money? No, this is employee provident fund. Only the employer can deposit. Who can withdraw? Bala can withdraw it, but generally at the time of retirement, etc. But who can deposit? Can Bala directly deposit? No. His employer will deposit. So it's like that this first 4,000 is received by Infosys, and then they should deposit. And what is the time period maximum? The PF Act says maximum 15 days. And Infosys, if you don't deposit within 15 days, then we will actually make your income. 4,000 will become your PGBP income. And even if you deposit after 15 days, let's say if you deposit late on 16th of, let's say it's for the month of April, and you have to deposit till 15th of May, and now you are depositing on 16th May, 17th May, 18th May, then also it will not be allowed. It will be permanently will become your income. Understood, guys? Everybody understood this concept?
Yes, sir.
Now please tell me. Now read it and tell me what you will do. Amount received by Ashish. Ashish is what? Is an employer. In our example, he is Infosys. So amount received by Ashish. Are you understanding why he is receiving the amount? Because his employee was supposed to get 1,20,000, but he has paid only 116, and 4,000 he is keeping it himself. That is the amount received by Ashish as employee contribution. See, clearly it is written as employee contribution to EPF. EPF is Employee Provident Fund for the month of February. Please tell me if it is for the month of February, so it should be deposited up to by 15th of March. How much is the amount? 10,000 rupees. Was deposited after the due date under the relevant act of EPF. The EPF Act says that by 15th of March you should deposit, but it is being deposited after the due date of ROI or after the due date of the relevant act? After the due date of the relevant act. So please tell me what you will do of 10,000. Everybody tell me.
Add back.
Not allowed.
You will make it his income. Correct? You will add it back. It will be your income, and permanently it will become your income. Employee contribution, due date of PF Act. Employer contribution, if you remember, it was due date of ROI. So if it will come in some of the question, then I'll discuss that also. Third, medical expenses of rupees 80,000 as appearing in the income and expenditure was okay. There was some medical expenses. Yes, 80,000 was there, medical expenses. Medical expenses 80,000 as appearing in the income and expenditure was expense for the treatment of father of Ashish. Tell me, is it a business expense or a personal expense?
Personal expense.
It's a personal expense. It is for the family member, right? For the father of Ashish, so it should not be allowed. It should not be allowed. It's a personal expense. Okay. And what it is? It is a medical expense. His father was 72 years old and was not covered by any health insurance policy. The said payment of 80,000 was made through account paycheck. So he has made through account paycheck. Okay. Please tell me, first of all, we will not allow this expense because it's a personal expense. Second, do you think that we will get some deduction in any of the section of 80C
Yes,
to
sir.
80U?
Up to 50,000.
So we know that there is a section 80D related to health insurance where we can pay health insurance for ourselves, for spouse and children. Whether spouse and children are dependent or non-dependent. Is it okay? No. Spouse, dependent, non-dependent, children should be dependent. And for the parents also, 80D, I'm talking about 80D, I'm not talking about 80C. 80D says medical insurance, medical insurance also known as health insurance or medical insurance. Two categories, for spouse and children. For spouse and children, we can pay them. But for spouse, dependent, non-dependent, children should be dependent. And for parents also we can pay, and whether they are dependent, whether they are non-dependent, and maximum how much? 25,000 for this category, 25,000 for this category. But if they are senior citizen, this 25,000 will increase to 50,000 rupees. So this will increase to 50,000, and if the assessee himself or his spouse is senior citizen, it will also be increased to 50,000 rupees, 50. Are you able to recall this 25,000 and 50,000?
Yes, sir.
Now,
Yes, sir.
Now, and in 80D it is also written that if the assessee or his parents, any one of them, is a senior citizen, and if they are not getting health insurance premium, then also the amount they are spending on medical expenses is equal to health insurance premium. We will consider that it is also health insurance premium for them. So please tell me, these are medical expenses of 80,000. And since this person, his father is a senior citizen and he does not have any health insurance policy, and it's practically, it happens, those people who are very old, insurance companies sometimes deny that we will not give you health insurance policy. Okay. In that case, they still are eligible for 80D deduction. So please tell me how much 80D we will get over here.
50,000.
50,000.
Very good. 50,000 will get it over here. Maximum it is 50,000 rupees for parents. Correct, Likita. Okay. Fourth, general expenses as appearing in the income and expenditure account. So there were some general expenses. See, there were some general expenses. General expenses as appearing in the income and expenditure account includes a sum of 25,000 paid to Anjalin on 5th January 25 as commission. So we have paid for commission 25,000 rupees for securing work from new clients. Okay, we have paid a commission. This payment was made to her without deduction of tax at source. We have not deducted the TDS. Please tell me, if we have not deducted the TDS, what will happen? Okay, now please understand one more thing now, because now most of you know the TDS provisions also. So first of all, even if you don't remember the section for commission and brokerage, we have section 194H.
94H.
Correct. For lottery commission 194G, for insurance commission 194D,
D.
and for other commission 194H. Okay. If the deductor is an individual, and his turnover of the current year or turnover of the last year?
Last year.
Turnover of
Last
the
year.
last year. So we see that only individual and HUF who are big individual and HUF, but don't write this word big or small in examination. How this individual or HUF becomes big? If the turnover of the last year is more than, for business it is 1 crore, and for profession it is
For profession,
50 lakhs.
lakhs.
If the turnover of the business or profession is more than 1 crore 50 lakh of the last year, then you should deduct TDS. Okay. So this guy has not deducted TDS. See, what is the turnover of the current year? 58 lakh 80,000.
58 lakh 80,000.
We are not concerned with the turnover of the current year. We should take the turnover of the last year. So let us see if whether turnover of the last year is given to us. Okay. Just read the last line and tell me what was his turnover of the last year?
52 lakhs.
52 lakh. The gross receipts of the last year was 52 lakh. It means that this person is a big assessee, big individual or HUF. It means that they are supposed to deduct TDS. And if TDS is not deducted, then we will disallow. We'll apply section 40 small a. So 40 small a will say it's a very, very important adjustment. So it will say that if now you know PGBP also and you know TDS provisions also a little bit, right? Now combine them together. Please tell me whether on commission or brokerage TDS provisions are applicable. Yes, we understand there is a section 194H. We also know that individual or HUF generally don't deduct TDS, but if their turnover the last year of business is more than 1 crore or profession more than 50 lakh, they are supposed to deduct TDS also. Now, this person has made a payment of commission without deducting TDS. Please tell me what you will do.
Disallow 30%.
You will disallow 100% or you will disallow 30%?
30%.
See,
30%.
100, correct, very nice. 100% is when we are paying outside India or to a
Outside
non-resident.
India.
Then 100% is disallowed. But otherwise, if outside India non-resident is not mentioned, then 30% will be disallowed. Because why? The TDS provisions are applicable. The TDS provisions are applicable and you have not deducted the TDS. Assuming the last year gross receipts would have been 42 lakh. It has been given instead of 52. This would have been 42.
We'll not do anything.
No need.
Then in that case, very nice. Then in that case, whether the TDS provisions are applicable, the answer is no. In that case, because this person is a small individual or HUF. Small individual precisely. So in that case, TDS provisions is not applicable and TDS provisions is not applicable, then we should not deduct the TDS, and section 40 small a will also say, don't worry, you can allow everything. Right? So it depends upon the turnover of the last year. Now you will ask me, sir, what will happen if let's say the last year turnover is not given to us? Neither more than 50, not less than 50. If last year turnover is not given to us, then
We will assume that the person has to deduct TDS, but he did not do that.
very good. So we will assume, because if they have given this information, we will assume that the turnover of the last year was more than 50 lakh. And that is the reason the examiner has given this information to us. And our assumption, we will write it over there just in 3 or 4 words, assuming the last year turnover was more than 1 crore 50 lakh as the case may be. Understood, everybody?
So one doubt.
Yes, please tell me.
So if the gross turnover is, I mean, the turnover of last year is 40 lakhs, for example.
If
Then
the last
won't
year
he
would have
be-
been 42 lakh, okay?
So then he will come on the 194J notes at TDS provisions.
Okay, you are asking the provision of 194J will apply.
Yes, sir.
No, see, first of all, Sumanyu, na?
Yes, sir.
Okay. Sumanyu, in that case, first of all, commission is given, so 194J will not apply. For commission, 194H will apply, right? Because 194J is payment for royalty, payment for technical services, payment for professional services. So 194J should not apply, 194H should apply. Second thing, if you are confused with whether the individual or HUF should deduct the TDS, the answer is
Sir,
mostly.
Sir,
Yes,
so actually, I'm sorry, sir. It's not 194J, it's 194M, sir. Sorry, I made mistake. 194M. Won't it be applicable 194M, sir?
just give me a moment. Actually, your voice is breaking. Give me a moment. Let me close this fan. Just give me a moment. So, Manu, now tell me your query.
Sir, suppose for example, sir, his turnover is 42 lakhs, which is less than 50 lakh as per the limit.
Correct.
You said that he won't be applicable for any TDS provisions, no, sir.
Okay, correct.
Then I have a doubt. Is he applicable under 194M, sir?
Okay, good. So we have few sections. In TDS. Now you're asking me a TDS query. So we have sections like 194IA, 194IB. 194I is when you purchase a immovable property of 50 lakh rupees or more. 194IB is for individual or HUF who pay rent more than 50,000 rupees per month. And there is section 194M, where you pay more than 50 lakh rupees for contract, for professional services, for commission. So if you, in these sections, actually, these sections are for individual or HUF only. These sections are for individual or HUF only. 194IA is for everybody, although, but IB and 194M is for individual or HUF only, where your turnover was not more than 1 crore or 50 lakh as the case may be, but still you are required to deduct TDS. So in these cases, if your case falls in these three sections, then still, if your turnover does not matter over here, if the conditions are satisfied, you should deduct TDS. So these are the exceptions of that small individual or HUF. This was your question, Sumanyu?
Yes, sir. Got it, sir.
So in that case, see, if 194M you would apply over here, the thing is that if the turnover is not given and you are going to apply 194M, okay, go and apply. But the thing is that 194M says that the amount which you are paying is more than 50 lakh rupees. But here we are just paying how much? 25,000 rupees. Correct? And guys,
Okay, sir.
194M will only apply. 194M will only apply. This is a TDS query. 194M will only apply if section 194C, if section 194H and 194J does not apply. If they does not apply, then this section can apply. And 194M has its own conditions also. Understood? 50 lakh rupees at least. So first, these are the primary sections, 194C, H and J. They are the priority sections. So first we will see that whether these sections are applying or not. So if these sections are applying, we should apply these sections. If these sections are not applying, then we can come to 194M. But 194M, the condition is that the payment you are making is more than 50 lakh rupees in a year. Got it?
Got it, sir. Thank you, sir.
No problem. Okay. Now, so how much we will disallow out of it? 30%. Fifth point. Written down value of the depreciable asset as on 1st April 2024 were as follows. So written down value of the depreciable asset for professional books 90,000, for computers 35,000. So they have given the information regarding computation of depreciation. Tell me on books, how much is the rate of depreciation?
100%.
100.
40.
40%.
We don't have 100% now. It is 40%. Even if it is annual books, library books, professional books, 40%. Right? Computers,
30%.
same, 40%. So we will apply 40% on this, 40% on this. The new furniture, and they have purchased furniture also, na? So we have to give depreciation on furniture also, because we will disallow this furniture. We'll disallow this furniture since it's a capital expenditure, and we will allow the depreciation only. Okay. Oh, Sugandha, you came here. Good. Now, sixth, the new furniture as appearing in the income and expenditure account was purchased on 31st August 2024. Okay, we have purchased the furniture on 31st August 2024. Tell me guys, the depreciation rate is 10%, you told me. Now please tell me half depreciation or full depreciation.
Full depreciation.
Because it was
Full
purchased on this date and put to use on the same date. In fact, put to use date is more important, and it is also put to use on the same date. If put to use date is not mentioned, then purchase date and put to use date, you all know, we keep it same. The payment was made as under. So how much was the furniture is for? 48,000. The payment was made as under. 18,000 paid in cash at the time of purchase of the new furniture. 19,000 paid by account pay check on 5/9/24 as balance of the cost of the new furniture. Okay. So out of 48,000,
18,000 disallowed.
Out of 48,000, we have paid 18,000 rupees in cash, and 19,000 is paid by account paid check on this date as balance of the furniture. Okay. And 11,000 is paid in cash on 31/8/2024 to the transporter as freight charges for the new furniture. Okay. So I'm splitting my 48,000. Let me write it neatly. Okay. 48,000 is the value of the furniture, cost of the furniture, and how it is. Actually, 18,000 we have paid in cash. 19,000 we have paid through banking mode, account pay check, etc., which is a prescribed mode. And 11,000 rupees we have paid in cash to the transporter as freight charges. See, you understand what is the actual cost of an asset. All the cost we include up to the date of installation, up to the date of put to use, we include all the cost. So even if we have paid the freight for it, it will be also be capitalized. So 11,000 we have paid to the transporter in cash. Okay. Guys, please tell me the 48,000 rupees we have spent like this. 18,000, 19,000, 11,000. We have paid 11,000 in cash to a transporter, 18,000 in cash to the supplier, 19,000 in banking mode. Tell me what would be your cost of the furniture. What would be the cost of the furniture for the purpose of
30,000.
for the purpose of
30,000.
depreciation?
30,000.
30,000.
Okay. Why so?
Because the transporter maximum limit is 35,000 we pay in cash.
Okay.
Cash
Everybody-
payment which is exceeding 10,000 has to be disallowed fully.
Okay. So this 18,000 shall be disallowed. So we will disallow this 18,000 because we have paid 18,000 rupees, which is more than 10,000 rupees. It should be disallowed. 19,000 should be allowed. We have paid through banking mode. And 11,000 paid to transporter. 11,000 paid to the transporter. We know that there is a section 48.3. It says that you should not make the payment of more than 10,000 in a single day to a single party. However, there are exceptions of 48.3. However, there is an exception of 48.3. It says that to a transporter, you can make a payment of 35,000. Right. So you can say, so now you are saying, sir, so 11,000, we are using this 48.3 exception. We are using this 48.3 exception. And because 35,000 we can pay. So that is the reason it should be allowed. So 19 is also allowed, 11 is also allowed, 18 is not allowed. So the cost of the furniture is 30,000. Guys, my point is here, this section 48.3 is not at all applicable over here. In fact, forget about the exception. Forget about the exception. Section 48.3 is not applicable over here. See what I have told you in the classes. I have told you, and everybody, those who don't know, in fact, I have told you in the classes also, when you make a cash payment, in excess of, please write it somewhere, in excess of rupees 10,000 rupees. Whenever you make a cash payment in excess of 10,000 rupees, you should ask from you that whether the expenses which you are making, is it for the revenue expenses or it is for the capital expenses. For revenue expenses, we apply section 48.3. For revenue expenses, we apply section 48.3. And anything which is capital expenses, there is a section of actual cost. There is a section of actual cost that what should be the cost of our asset. If it is capital expenses, it means that we are talking about assets. So the actual cost, there is a section 43.1. Section 43.1 is of actual cost. Now what happens is, this section 43.1 says that if you are making a cash payment, more than 10,000 rupees in cash in a single day, then it will not form part of cost. It will simply, it says, it will not form part of cost. It will not form part of your cost, and you will claim depreciation not on that value, on only the remaining value you can claim depreciation. Example, in fact, this is the thing which we have discussed in the class also, both in fast track as well as in regular. Example, that if you have purchased a machine of rupees 1 lakh and cash paid for it is 15,000, cash paid is 15,000 for that, remaining is paid through banking mode, etc., then your cost will be, then the actual cost would be only 85,000. On this amount only you can claim depreciation. Understood? And guys, there is no exception of 43.1. There is no exception of 43.1. It's very simple. It's very, very simple. That it would be just 10,000 you have to make this. You have to make just 10,000 rupees. If you are making more than 10,000 rupees, it just simply will not fall under cost. Whereas 48.3 is related to revenue expenses. It again says the same thing, that you should not make the payment more than 10,000 rupees. You should not make the payment. And there are certain exceptions also. 48.3. There are certain exceptions also of 48.3. Which section? Revenue expenses section. We have certain exceptions also. What are those exceptions? That you can make a payment to a transporter up till 35,000 you can pay. Transporter of goods you can pay 35,000. There are other exceptions also.
Payment to producer.
You are purchasing agriculture produce and you are making to the cultivator, the producer. You are purchasing any other goods which are made without the aid of power, correct, electricity, without electricity, and you are making the payment to the direct producer, and other exceptions are also there. So these exceptions, guys, are 48.3. There is no exception of 43.1. 43.1, just no, more than 10,000, cut. Understood? Now please tell me if in this case 48.3 will apply or 43.1 will apply. It is revenue expenses or it is capital expenditure?
Capital expenditure.
It is capital expenditure. For capital expenditure, we know only one thing, 10,000. That's it. Understood?
Yes, sir.
So in that case, we only need one thing, that is 10,000. So it means that it's a capital expenditure. Section 48.3 will not apply at the first place. Section 43.1 will apply. That is actual cost. So this will also be cut. This will also be cut. So 18,000 will be cut, 11,000 will be cut, and my cost would be only 19,000 of the furniture, and we will claim depreciation on 19,000 rupees, and that too for the half or full. So 19,000 into 10%, 1,900 would be the depreciation. Everybody got it or not?
Yes, sir.
sir.
Good. Yogesh, you are asking me step members of family. See, only step in step thing, only child is included. Nobody else. Only child. Child includes adopted child and stepchild, but brother does not include adopted brother or step brother, right? So only child you can take for the step one. Okay. Now, Ashish has purchased a car on 2/4/2023. Guys, in which previous year he has purchased the car? In previous year, 23-24, right?
24.
That is last year. So our current year is, our year is ending 31st March 25. So we are doing for the previous year 24-25, right? We are doing for 24-25. So he has purchased a car a year back. Okay. So he has purchased a car on this date for 3,35,000 for personal use. Okay. So it was his personal car. Correct. However, on 30/4/2024, he brought the said car for the use in his profession. He brought this car into his profession. Okay. Personal asset now converted into a professional asset. He actually brought this car in his profession, in his business. The fair market value of the car as on this date was 2,50,000 rupees. Tell me, what would be the cost of the car which we will record in our books?
3,50,000. 3,50,000.
350. From 350, where you are coming? 350?
Oh, 3,35,000.
Okay, 335. Okay, I'm giving you options. I'm giving you options that whenever you transfer your personal assets into your business asset, should you record it at your original cost? Here, original cost would have been 3,35,000. Should you record it at original cost? Should you record it at original cost minus deemed depreciation? Deemed depreciation of those years when we have actually purchased. Let's say we have purchased it 2 years back. So should you take into effect the depreciation of those 2 years? After reducing that depreciation, you should take it, or you should take it at the market value. So we have three options.
Original cost.
Option A, original cost.
Original cost.
So we
Original
have,
cost.
okay, so we should take it as a market value on that date on transfer, market value on transfer. So at what value we should record it? If, and the students who don't know it, please write it. If we are transferring our personal asset into our business or profession, at what value we should record it? See, there is a section 43(1), which is actual cost. That what should be the actual cost which we should record this in our books of accounts. So section 43(1), there is an explanation number 5. No need to remember the explanation number 5 number. No need to remember the actual cost section number also. However, what you should remember, that if this would have been a personal building, only in case of personal building, if you are transferring your personal building, only building, not any other thing, not car, not any other asset, no, only your personal building. If your personal building is being transferred into your business, then it is option number B. Original cost of the building minus deemed depreciation. Let's say this building was purchased 2 years back. Then please compute the depreciation of last 2 years. And then after reducing the depreciation, record it in your books. If it is only building, then you will do it original cost minus deemed depreciation. But if it is any other asset, please use it for any other asset. Please use it original cost only. Everybody is okay with it? So guys, you were correct. So we should record it at as original cost only. So we will record it at 3,35,000 only. No deemed depreciation, no fair market value. So no fair market value, no deemed depreciation, 3,35,000 we will record. And we will bring this in our books of accounts. And what is the depreciation, guys, which you want to charge in this year? Because now you brought it in this year. So what is the rate of depreciation on car? 15 or 30?
15.
It's a capital expenditure. Now it's your actual cost. So now you will compute depreciation also. So how much would be the depreciation? 15%. Right? Okay. Ashish made a contribution of 1 lakh in his PPF account on 31/1/2025, where he will get deduction in PPF. He is investing in PPF. So tell me which section he will get the deduction? ATC deduction. Gross receipts of last year is this. Now we need to compute his total income. Very nice question. Examination question. Please tell me now when you will start this question. How you will start it? When you are supposed to do your total income questions. So yesterday I have told you. Very nice.
First you want
heads you have.
Correct. So first you will see that out of 5 heads, which income I don't have. So we have 5 heads. Salary. Do you think that the assessee is having any salary income? No. Salary he does not have. Second is house property. Do you house property he has? No.
No, sir.
House property he does not have. Now, third, PGBP. Obviously he has PGBP.
Yes.
Capital gain.
No.
No, sir.
We have not read capital gain anywhere. IFOS he has. So he has only 2 heads, that is PGBP and IFOS. And we need to compute his total income. We have to show the deductions also. We have to show the tax liability also. You should show this ideally as a professional. You should show this in the front page, at the first page, main page, and the working note on the next page. Correct, Likitha. Correct, Vichi. Correct. Now, everybody start this question with me. And guys, this particular notes the students have received on their WhatsApp also, and the students who can also download from the application Rajat Mukha classes. The description is in the link is in the description, so you can go and download this from the free material. When you will download the app, there is an option of free material. Go to free material. There is an folder of practice sessions. There is a folder of practice sessions. Go to that folder. The schedule is also I have uploaded that what are the classes which I'll be taking. Although I'll be taking till examination, but still I have made a schedule till 23rd of August. So where I have mentioned what all classes I would be taking. For some, first part would be income tax. Then I'll also be starting with the GST revision also, right? And from 18th till 24th, I might not be take class. 18th to 24th, I might be traveling. So I might not take class from 18th I can take. In 18th in the morning, I'll take it. But till 19th till 24th, I'll not be able to take. So I'll resume after 18th, I'll resume on 25th. Okay. Solution 1. Computation of total income and tax liability of Mr. Ashish assessment year 25-26, and we are following default or optional regime. Optional regime. Now everybody try to do it yourself also. You can take the help of the screen, but I would highly recommend if you try to do it yourself.
Sir,
Yes, please.
is this question already there in the question bank or is it extra?
I need to check. I'm not sure.
Okay, sir.
Might be in the total income question. Might be in the total income thing. Not total income chapter. It might be.
Okay, sir.
Right. Just check your total income. I think it would be there. Total income chapter.
Okay, sir.
Okay. So we have particulars. Rupees. So we have income from PGBP. Guys, in your examination, you can use these short form, right? Not all short forms, but which are quite universal. PGBP, LTCG, long-term capital gain, LTCG, short-term capital gain, STCG, IFOS, income from other sources, IFOS, acceptable by the examiner also. PGBP, IFOS, LTCG, STCG, so which are universally everybody understand. But if you use your own short forms, no, please don't use your own short forms, which only you know. No, don't use that. PGBP. So for PGBP, it is good idea to make a working note. So we'll make a working note number 1. Then we have IFOS also. For IFOS, we'll not make working note because just there are 2 or 3 points in IFOS. So whenever you are looking for your IFOS income, look at your credit side, look at your income side. Interest on PPF. It is IFOS, but it is exempt. So we'll show it over there. PPF interest. It is exempt. Simply, right, like this. In examination, simply exempt. Second, saving bank account. Saving interest is taxable, and we have NSC interest also, that is also taxable. Guys, please remember, saving interest as of now make it taxable, but thereafter we will give 80 TTA. NSC interest, please first make it your income, and thereafter we will give 80C NSC interest reinvested. So how much it is? 20 and 21. So this is 20,000. And this is 21,000. any other IFOS also. So mostly your IFOS, you will get it from here. But still, I'll just look at it. Expenses, if there is any other IFOS, if I can found. Employee contribution, medical expenses, general expenses, depreciation, furniture. No, there is no other IFOS. So mainly 99% you will find your all IFOS over here itself. So this would be 41,000 is your IFOS income. PGBP, we will calculate PGBP. And after that, there is a gross total income. Less Chapter 60 deductions. 80C we have. Yes, we have read somewhere that 80C we have. Or as of now, even if you don't want to write it, as of now, just leave it here. And first we will compute our PGBP income. First of all, tell me, everybody has copied till here? Everybody done till here? I think you all are doing it. Very nice. Okay. Now, I'll make a working note. PGBP. Net profit as per P&L account. As per P&L account, income and expenditure account does not make any difference. Even if you write P&L account, that's perfectly fine. In your exams also, 39,43,000. Then expenses side. Step 2, expenses. Don't add information also as of now, just the expenses. Employee remuneration generally allowed, office expenses generally allowed, general expenses not allowed, allowed, electricity expenses allowed, medical expenses, if you want to allow it right here, you can allow, but we know that it's a personal expense, so I'm disallowing it right here. Medical expenses, 80,000. Add medical expenses. See, medical expenses, if this would have been for the employees, then we would have been okay with regarding it. But since it is for the father of the assessee, so it's a personal expense. So it's a personal expense. So we will disallow 80,000 rupees. We'll add anything which you will subtract now, please write in bracket. This way you will not make the mistake in examination. Otherwise you might make a calculation error. Second is purchase of furniture and depreciation also, because depreciation will be computing it separately. Purchase of furniture 48 and 90. Depreciation as per books, because we will be doing the depreciation separately. If somebody would like to take the net effect of depreciation also, they can go ahead and take that. Then step 2 done, expenses done. Step 3, income side. So we found that only consultancy charges we are okay as PGBP, but all these 3 income is not your PGBP income. So we'll subtract them. 60, 20, 21. Less. 60 was PPF interest. 20 is your saving interest. And 21 is your NSC interest. PPF, saving, NSC interest. So these are all does not belong to PGBP. Some might be exempt, some might be IFOS. Okay. Now we are done with step 3. See, step 1, net profit as a P&L account. Step 2, expenses side. Step 3, income side. Now look at the information. First, family planning expenses, we will not allow it. How much? 20,000 rupees is incurred. We will not allow, we will add it back, add Family planning expenses, not allowed. Simply not allowed. Don't write too much stories over there. You will not get time. So smartly, you have to complete your question. 20,000 you will add it back. Then we have payment of salary to sister-in-law. So either you can give a note separately or you can just show it over here. So it's better to show it over here. So salary to sister-in-law, allowed as non-related. Since she is not related to us, so even we can pay more than fair market value, no issues. You have to show this, right? Then second point was employee contribution. We have received 10,000 rupees and we have not deposited up to the relevant act. So it will be your income. So 10,000 again, you will add it back. Employee contribution, not deposited. Simple. Don't write stories, guys. Just 3 or 4 words you have to intimate to the examiner. In minimum time, you have to intimate to the examiner. And how you will learn? You will learn through practice only. Just 1 hour per day, it would be more than enough. I'm telling you, 1 hour per day, it would be more than enough. So spend your morning time with me. Employee contribution not deposited. How much? 10,000 rupees. We'll add it back. And guys, be very particular that whatever you are subtracting, please write it in brackets. Whatever you are adding, please write it normally. Then third, medical expenses 80,000 as appearing. We have added it back and then we will give 80D. So I'm writing that 80D I will give it. After that general expenses appearing in the income expenditure account 25,000, no TDS has been deducted, 30% will be disallowed. So add no TDS on commission, 30% of how much? 25,000, 7,500. Add it back. Then depreciation. Depreciation will compute. Fifth point is regarding depreciation. Sixth point is again for furniture. We have to compute depreciation because 48,000 we have already added it back. Then it was car. We'll compute depreciation. Okay. So all these 3 points are related to depreciation. So let us do it right here. We are not making a separate note for depreciation. It's easy. We'll do it directly. So let's depreciation under section 32, how much it would be. So first of all, on books, then on computer, then on furniture, and I'm just leaving one more line, and on car. So on 4 things we will compute the depreciation directly. So books were 90,000, 40%, computers were 35,000. So 90,000 into 40%. Computers were 35,000 into 40%. Furniture. Furniture was 48,000 minus how much we have paid in cash? 18,000 minus 18,000 minus 11,000 to transporter. Not allowed. Why we are not allowing it? Since it's a capital expenditure. If it would have been revenue expenses, I would have allowed it, because if it would have been a revenue expenses, then section 48(3) will apply. But here, this is not a revenue expense. We have already discussed. It's a capital expenses. So we don't consider anything which is more than 10,000 rupees. So we will claim depreciation on how much? 48 minus 18 minus 11. So only on 19,000 we will claim depreciation, and 10% would be the depreciation. So it would be 1,900. And I should show all these depreciation. Okay, I have not calculated here. Okay, I'll calculate it later. So 10%. And on car, please write at original cost. Please write, but just show to the examiner that which value you are taking at original cost. So it was 335. It was 3,35,000 into 15%. So just see how much is the depreciation. 90,000 into 40%, 36. Then 35,000 into 40%, 14,000. This is the depreciation. This is the depreciation. Then 19,000 into 10%, 1,900. And then 335 into 15%, 50,250.
1,02,150, sir.
Is it? Okay.
Lakh 2,000.
1,02,150. Correct. 1,02,150 is the total depreciation, and we should subtract it, right? We are subtracting it. Okay. Now, Ashish has made a contribution of 1 lakh, that is an ATC. Now we are done with the PGBP. So all the information we have done. So now you need to compute your PGBP. Anybody calculated it?
39,95,350.
99,350 I heard. Is it 99? 40? How much? 40? 40? Is it correct?
No, sir. 39,95,350, sir.
Okay. 35 lakh 95
Five.
350. This is your PGBP. Correct, Likita. 102 150. Correct. Thank you. Is it same you are getting PGBP 39.95 350 everybody? Okay. I think done by everyone. Okay, now I am taking this 39.95 350 in my main computation. 39.95 350. $39.95 350 plus 41,000.
40,26,350, sir.
40 lakh 36,350. Correct, Samanyu. Thank you. Now, deductions under chapter 6A, ATC. So ATC, first of all, he is depositing in PPF. How much he was depositing? It was given to us.
1 lakh.
1 lakh rupees he is depositing in PPF. And what else? What else, guys? NSC.
Interest on NSC.
Correct. NSC interest reinvested. So it was 21,000. So total deduction under ATC, he will get 1,21,000. This is ATC deduction. Then we have ATD also. Why? Because it is for health insurance or medical expenses for the father. So ATD, here it would be medical expenses for father. Expenses on father. For father. How much? Actual expenses was 80, but maximum limit is 50,000. So maximum 50,000 we can claim. Okay. So just see if there is any other deductions. ATTTA is there, we know. Apart from ATTTA, there's no medical expenses we have done, general expenses. No, there is no other deduction. Only ATTTA is now the deduction. ATTTA, A, saving interest. So saving interest was 20,000, and B, rupees 10,000 is the fixed limit, whichever is lower. So 10,000 would be the deduction available. So we are getting
38 lakh 55,350.
correct 38 lakh 55,350 would be his total income. Correct, Likita. Good. Vijay, correct. 38, 55, 350. And now we need to compute the tax on above. As per default rate or as per optional rate? As per optional rate.
Optional rate.
Before you compute your taxes, you should see that whether we have any special income, whether we have any 111A, 112, that is long-term capital gain, or 112A, long-term capital gain on shares. So we don't have any that income, capital gain income. We don't have any 111A. We don't have any long-term capital gains. We don't have any casual income also. Do we have any casual income? No. So we have only IFS, which is normal, and PGBP. So tell me, what is there any special rate or normal rates you will apply? Normal slab rates. So tax on above. At slab rates, I think you can apply. What is the slab rates for the optional regime? It depends on the
0 to 2.5 lakh.
Correct.
Nil.
Correct. So up to first 2.5 lakh, up to 2.5 lakh is nil. Then from 2.5 to 5, next 2.5 lakh,
5%.
we have 5%. Then 5 to 10, next 5 lakh, we have 20%. And then from above 10 lakh, so above 10 lakh would be remaining. How much it would be? Just subtract 10 lakh from here. So it would be on 28 lakh 55,350 at a rate of 30%. This is nil. This is 12,500. This is 1 lakh. And this is it 856,605? Let me know if my calculation goes wrong somewhere. So 9,69,105. Correct. Now, what we will do? Should we add surcharge also? Should we add surcharge also? No, because the total income is not going above 50 lakh. So we should not add surcharge. If it would have been above 50 lakh, we would have seen the surcharge also. But as of now, there is no surcharge. So now you can add 4% health and education cess.
38,764.2.
764.2.
10 lakh 7,869.2.
869.2. Even if you want to ignore 0.2, that's
Round
okay.
out.
So this is your tax liability. This is called tax liability, and you need to round it off. Round it off. 10 lakh 7,870. This is your answer. Understood, everybody?
Yes, sir.
Okay. So it was a good question. In fact, it was covering most of the aspects of PG payment deductions as well. But yes, there would be questions where there would be capital gain and other things also. We will be discussing total income questions separately as well. These are PGBP thing. So next schedule from tomorrow, we have capital gain. Although I would like to discuss the second question also, which I have there in the handout. In case if I don't get time for that, then I would request you as a homework, because there is an answer also to that in the handout itself. So in fact, I would request you to please do that question as a homework. So the question number 2, which is in the handout, please do it as a homework, and let us meet tomorrow at 7:30. Thank you so much,
In
guys.
the practice session schedule,
Yes,
not mention salary surplus.
Bala, it is practice sessions schedule, the morning sessions schedule.
Yes, sir. In that you have not mentioned salary surplus.
Salary. Okay.
sir.
Actually, for September examination, the time is limited now, so I would like to emphasize more on the important topics. So if the time permits, don't worry. After 23rd also, I'll be taking the classes till examination. So whatever the topics which are left over, we'll take it there.
Okay, sir.
Don't worry. We'll do salary. You want to do salary revision also?
So you again do the practice session in the November, December.
I'll again do. Don't worry. Don't worry. After the examination also for January, we'll do the practice session. We'll continue this. Don't worry.
Okay, sir. Thank you.
Your morning 7:30 to 8:30 or 9 is with me. Don't worry about it. Monday to Saturday. Okay.
Sir.
Bye bye. Take care. Any other doubt?
Thank you,
Please
sir.
tell me. Any other doubt? Please tell me. That's it. So see you tomorrow, guys. 7:30. Bye. Take care.
Thank you, sir.
Bye bye.
Thank you, sir.
Bye bye. Bye bye.